This interview is brought to you in association with Rabobank.
Hello and welcome to the first of our Rural Delivery online interviews for 2015, where we talk about the issues and events affecting those working in and for New Zealand's primary sector. With me now is Chief Executive of Rabobank New Zealand, Ben Russell. Ben, thanks for joining us.
Hi, Roger.
Ben, Rabobank's just put out its agribusiness outlook for 2015, and if there's a theme in there, and in previous outlooks also, it's this idea of volatility and resilience in the face of that. We've had the dairy prices come off a little bit. So if we could just start with the dairy side of things, Rabobank actually picked this. We'd seen prices coming up post-December, coming through to March. You did actually signal that there might be a bit of a correction as the market told people to settle down. Is this the sort of correction you're expecting to see?
Well, I think it is, Roger. It is very hard to pick at the moment, but what was surprising to our dairy analyst team was the sharp rebound that we saw over February and the early part of March, with prices jumping. I think a couple of auctions where prices jumped by sort of up towards 10%. And to be honest, our dairy analysts found that a bit hard to pick. They were expecting a more gradual rise. And of course, this most recent auction, there's been quite a sharp correction back, a fall, I think, for whole milk powder of close to 10%. So, and the general outlook from our team over the net is really for a sort of bit of a bumpy ride over the rest of into 2015 and in towards the second half, gradually moving towards a recovery. But there's still a lot of pretty significant factors that are weighing on the dairy price.
Speculation in mainstream media that this is somehow related to the 1080 scare. Is that something that your analysts have banked into their own calculations?
It's not a fundamental factor, is our view, Roger. It really is essentially underpinned by supply-demand conditions. Certainly the 1080 scare hasn't helped, and there's a lot of testing going on. There's new test protocols being put in place. It's not a helpful factor, but we've been very cautious about the pace of recovery in the dairy sector, right through this year before the 1080 scare happened. So you've got big milk flows still coming out of Europe. You've got the New Zealand dollar-euro exchange rate is at record highs, which makes European milk a little more competitive. We've still got pretty sluggish demand in China. We've still got Russian trade bans that are really sort of disrupting the flow of European milk. And so all of these factors are washing around, making it a very uncertain commodity dairy marketplace. And we think they're the sort of real factors that are driving the market rather than the 1080 issues.
Okay. And what about on the farm itself? What are the sort of things you're picking that New Zealand farmers are going to be dealing with in their own environment, I guess, beyond the weather?
Yeah, well, beyond the weather, yes, but the weather has been the dominant factor, and I think when you look at all of the things that are going on in the agri space, you talked earlier about the theme of volatility. 2014 and well into 2015 is just a huge reminder of what a volatile business agriculture is. And the swings in commodity prices, the very tough climatic conditions, are really big factors that farmers need to deal with. And it's not easy if you look at the sheep and beef sector. It's not easy if you're running a farm. You normally sell your stock in March, but you're running out of feed very quickly. It hasn't rained. It's been a very dry summer. The stock are going to start to lose condition if you can't move them on. Prices are falling. So this is a tough environment to be doing business in, and that's what our farmers need to face on a daily basis.
Obviously, the answer to that is resilience, and that often means being adaptive, both to economic conditions and, of course, the climate. What's the role of a bank in helping the industry prepare and develop that resilience and to think in those adaptive ways and to change systems or to change markets or to change product or to change the way they think in response to that volatility?
Yeah, a really good question, Roger. I mean, you're spot on resilience. If you're not to be a successful farmer these days, you've got to be lots of things, but you've definitely got to be resilient. Dairy farm incomes, as an example, this year are going to fall by probably close to 50% on what they were last year, and their expenses are going up because of the dry conditions. But you've also got to be a pretty smart business person. There's a lot of moving parts in a farm business. Getting your production and your systems, your timing right in your farm operations is very, very hard. So there's a lot going on. So what's the role of a bank? Well, for us, it's to really understand our clients' businesses. I think that's the biggest obligation a bank has got. Every farm business is different. They've all got different strengths and weaknesses, and you can't treat them like a cookie cutter. You've really got to understand, where they are today, where their goal is, what do they want to achieve? Do they want to have a bigger farm? Do they want to retire and get the kids onto the farm? Do they want to make some off-farm investments? It's really understanding case by case what each client's needs are, and then you've got to deliver to those, but within an overall context of being a responsible lender and not lending them more money than they can afford to repay. So, we love our role, and we love the industry that we're in, and it is complex and it is challenging. But that's just a great challenge for us to work alongside our clients to help them out.
Oh, look, sure. Hey, getting back into the forecast, dairy at the long term, you're saying is going to, the picking's going to be up over the year. Beef also. What's driving that?
Yeah, well, beef has come off a real high, a real peak from last year. But we've got. We still think so. It has retracted a little from the real peaks of late last year and earlier this year, but the dry weather, I think, has had something to do with that. But we're still seeing quite tight global beef supplies. Certainly, for example, New Zealand often competes in export markets with the likes of Australia, who are big international beef suppliers. The Australian cattle herd has been depleted over the last couple of years with droughts. A lot of stock have been slaughtered as a result of droughts. And we're expecting the Australian beef herd to go through somewhat of a rebuild phase. And to some extent, that's also true in the US. So beef supplies globally are still quite tight, and that represents good, medium to long-term prospects for New Zealand, both in the prime beef and also in the commodity grinding beef sectors. So broadly speaking, we'd see a solid outlook for the beef sector.
Okay, and you've got sheep sitting more or less flat for the year. I guess there's an issue there with the euro being so weak.
Yes, sheep meat has. I think overall farmers are quite disappointed in the pricing. We're just looking at some rural confidence survey data, which will be released very shortly, and it's showing the confidence of sheep and beef farmers, but I think primarily coming from the sheep side of their enterprise, has really retracted, and I think farmers have been very disappointed with the pricing that they've seen. Obviously, the drought has not helped. There's been a big concentration of kill over the sort of February-March period, and that has weakened prices. I think the high exchange rate, particularly against the euro, with Europe still being our largest value sheep market, all of these things are adding up to produce what are quite disappointing prices for farmers. Again, longer term, fundamentally, we think the demand outlook is still strong. There's still a lot of debate and discussion about industry structure, overcapacity in the processing sector. And I think until there's a bit more clarity of direction, farmers will be a little preoccupied by that, particularly when their returns have been so disappointing.
What are the two or three things that Rabobank would say to its customers in terms of, hey, there's a lot going on out there that could distract you? What are still the fundamentals for your customers in terms of looking at their own businesses in the midst of this volatility?
Yeah, and look, Roger, it is easy to get a bit tied up in all of the difficulties that are out there, and they are. But if you stand back from it all, this is still a very, very good business, and the long-term outlook, the long-term demand outlook is very strong. The world is changing what it eats. There's going to be good demand for food. Resources are constrained. So the fundamentals of this business are very, very sound, and we're very confident about the longer-term outlook for farmers. But it is very challenging, and you've got to do more than just turn up, and farmers know this. But I think often a lot of people look from the outside and say, well, that must be a pretty easy game. But you have got to do a lot to get your business just right. And these sharp swings in the ups and downs mean that if your business is not well organised, if you don't have some particularly financial resilience, some balance sheet strength, and good management systems and good people around you in your farming business, these tough years can be very destructive financially. And so for us, it's all about farmers having a plan and developing that plan so that they can get through those tough years. Because the good years, as we've seen in the last couple of years in the dairy sector and also the sheep and beef sector, the good years can be quite financially rewarding. But you've sort of got to be around, you've got to have your business in a strong enough state so you're around to really enjoy those good years and take advantage of them. Bank the earnings that come your way, because it is a very up and down cash flow for farming. So that's, great long-term outlook, and it is worth getting your business in a really strong state so that you can really take advantage of that. But it's not easy.
Sound advice, Ben. Look, thanks very much for joining us. We'll make sure we check in with your analyst team through the year to have a closer look at some of those sectors and how, I guess, they're responding to that sort of wave of volatility that they've got to face. And let's dig a little bit deeper into this idea of resilience. Thanks again for your time today.
Thanks, Roger. That's great.
This interview was brought to you in association with Rabobank.